Good morning and welcome to Kramer's Corner with Daily Technical Update. It is Tuesday, it's the 13th of January. This video is for educational purpose only. There's no recommendation or advice whatsoever intended. Well, yesterday we saw that the Nasdaq was almost unchanged. We'll look at that in a minute. But let's have a look at some of the constituents, some of the Max 7s. And today we'll start with Google or the Alphabet C share. That I think was the primary reason why Nasdaq 100 didn't go into negative after a fairly volatile day. New all-time highs, pushing higher, and there is a little bit divergence building up on the RSI on daily and especially on weekly, but the trend seems, despite that, fairly strong, and I think we could see it pushing towards 340, maybe 350 area up here, and I am taking a Fibonacci projection to indicate some levels here, 348, maybe 352. Another one that went against the overall market, but it's not a Max 7, it was Oracle that has been performing quite badly the past 6 months, bounced off the gap support down here, didn't close the gap with a closing, and has bounced a little bit ever since. And yesterday and Friday last week there were still some positive wins around it, and it could bounce a little bit further, possibly up to around the 200 moving average, which is around 216, 217. I don't think it will move back into a bullish trend, but let's see with the overall market what it can do. Meta also, Meta on the other hand was a bit depressed yesterday. It's been actually that for quite some time, as we can see here. The RSI indicator is still showing negative sentiment, and we are back below here the cloud. We didn't get it back above it during this bounce here. So short term it looks quite bearish. Supported by the negative sentiment on the RSI, same on the weekly. So I think we could see Meta pushing lower in the coming weeks. So it could spell some trouble a little bit for Nasdaq. And Nasdaq yesterday, another day where it tested the resistance here at 25,888. I have adjusted a little bit. It was 25,827, but this one peak here is a little bit higher, so I will give me a little bit more leeway here. But it has broken above the falling trend line, but key resistance is still 25,828. We can also see it here on the RSI 60. It tested once again yesterday the 60 threshold, so we are still slightly in a negative. However, we do have higher high, higher low, and higher high. So we actually has established the bullish trend. I just wanted to be confirmed by a close above 60 threshold and a close above 25,828. It spiked a little bit above yesterday. If it does take it out, if it does close above, well, then I think we will see a fairly strong first quarter of 2026 towards 26,500, maybe even up to 27,000. And I try to illustrate that with taking the peak and the trough of this triangle-like pattern and added some Fibonacci levels, and we have the 61.8 here, just above 27,000. The Nasdaq future, well, basically unchanged, so not much help there. We have S&P 500 new all-time high close, so it's leading the way, positive sentiment. So it's other sectors than the tech sectors primarily driving this. It is the banks has been doing fairly good. They were a little bit back yesterday, and some of the farmers has also been doing quite nicely. But it is primarily the commodity shares, related shares, in especially metals that is driving the market higher on S&P 500. Pre-market here, the unchanged. The Dow Jones also on an elevated state, so maybe we'll have a little bit of correction kicking in if it can't push higher. The small caps are also doing quite well. A new all-time high close on the Russell 2000 indices, illustrated by the iShares ETF. In the Hang Seng, new push higher, as we talked about, move above 27,000. It did so, but it's set back, and that's a little bit of a bad news, I would say, if it closes the gap down here, and especially down to 26,264, it could come into some real trouble here. But positive sentiment, still bullish trend is intact, but that is a little bit of worry for bulls that it was actually a bearish candle. It ended the day on a bearish note despite overall positive close. So be cautious in the Hang Seng market. Nikkei, little bit of a breather, but still positive sentiment, bullish trend, and I think we could still see it higher towards 55, possibly higher in the coming days and weeks. It's a very strong bullish trend, positive sentiment despite a little bit of divergence. Bullish trend could lead it higher. EuroStoxx50 still pushing higher yesterday, and a very strong bullish trend, no divergence on the RSI. We could still get a correction someday, but the overall bullish trend is intact, and I think the European stocks will have a quite good Q1. I'm fairly bullish throughout at least January and February. Pre-market basically unchanged, and maybe that's where we could have a little bit of correction. But the overall bullish trend is will still be intact. DAX, strong move yesterday, also again above 25,400, and also medium term, fairly strong bullish trend. So I think we will, but we are a bit stretched, I would say. We need a bit of a correction before next move higher. I think that we will see some profit taking kicking in, so be careful a little bit and maybe be ready to buy the dip. It's not a recommendation to buy the dip, but it could be a potential idea, or a good idea maybe. On the FX market, we have euro dollar that bounced yesterday off the support here just above 116, but then slided back in the late session. So now it is above the cloud, but there's negative sentiment there. So it will take a little bit. It needs to get its mojo back to better, so to speak, for a push higher. If it takes out the peak yesterday, then I think we'll see it to move towards 117, 60, 70 level here. But for now, the next few days, I could see we are a bit depressed here. If it takes out the lows there from yesterday at 116.15, well, then expect to move down to 115.50. Sterling dollar, strong bounce yesterday, keeps it up a little bit here around the 61.8, retracement 134.35. I think it will bounce further here the next few days. Positive sentiment on the RSI. 200 moving average rising, 55 coming up there. So I think eventually we will move higher here on the on cable sterling dollar. Euro sterling, we can see that set back. It couldn't really get any traction towards the falling trend line, the 100 moving average and the 38.2 retracement. I think we will see a test of the lows here, possibly also taking it out, and a push lower below the 200 moving average is in the cards, down to around 86. That is a possible outcome at the moment, after it couldn't really push up. However, if it takes out these peaks here from past few days and last week, well, then maybe we could get it up there to test this level, but I don't think so. Yen pairs pushing higher, and dollar yen is after breaking above the peak and the resistance there, we are headed towards 160 inside that 161.8 projection of this correction here. So I think we will see that in the next few days, supported by the positive sentiment on the RSI, also broken above its falling trend. Euro yen also pushing higher, and I think we'll see it towards 186, 187 here in the coming days and weeks. So the uptrend continue, higher highs, high lows, higher highs, higher lows, and so on, and positive sentiment supporting that bullish picture. Aussie yen also pushing higher, very strong trend there also indeed. RSI beginning to move back above its falling trend line, further supporting the bullish outlook, and we can see where it's headed towards. It's headed towards the peak levels there from July 2024. at 109.30 level. So I think we could see that maybe here in the first quarter. There will be some corrections, of course, as we have seen previously, but fairly strong trend on the Aussie yen. So basically all around the yen pairs, strong move, sterling yen, strong move here. And again, if we look back where it's headed towards, it seems it's headed towards these levels now, very close to the 215.80 peak there before the strong sell-off there back in, what was that? That was back in 2008. And so very strong. And if we try to guesstimate it a little bit using the Fibonacci levels, we can see after this corrective move here, where are we? There we are. Well, we are looking at levels 220, 222, first one 216.5, 260, 1660, 222 up here could be seen. And then, of course, we have the peak there from July 2007. That was actually just prior to the financial crisis, massive sell-off in the stock market. I'm not saying that scenario will repeat itself, but it is a bullish trend leading to these levels at least. The Aussie dollar, also strong bounce yesterday, as we talked about in an earlier session, pausing here at the 61.8 retracement, but still positive sentiment on the RSI, but it's declining. We need the RSI back above the falling trend line there, and if we get that, and I wouldn't be surprised to see that, well, then I think we'll also see the peak here around 67, 65 being taken out with a push above 68, 68 and a quarter around these levels if it holds up above here. But we have all moving averages pointing higher. I think we'll see it moving higher here in the coming week or so. Dollar Canada can't really get past the 55 and the 100 moving average with a bang. It is in a positive sentiment though, so I think it's just a little bit of a breather it's taking, and then I think we'll see it pushing towards the 61.8 retracement here at 139.40, and that could be key. If it can get back above the cloud area, then I think there's more upside potential towards 140 and a quarter. The Sterling Canada also trying to push higher, and I think it will eventually. Positive sentiment on the RSI indicating towards 180, the 138.2 projection of this corrective move there. Swiss franc, well, still not doing much. Let's zoom in on it. So this is really what it needs, and I think I will draw a horizontal line there. So it really needs to take out 93 and a quarter to the upside, and the downside 92.65. I think that's the range it needs to break out of, because if it breaks up above and stays above at this level there, then it's likely also to take out the 200 moving average. It has for good taken out stayed above the cloud area, and I think if that scenario plays out, we'll also get RSI back above 60 threshold, further confirming upside potential. However, we are in a negative sentiment still, so this is just a correction phase. Bullish one though, but if it takes out 92.65, then I think we'll also see the RSI back below 40, confirming a bearish trend to resume. Dollar Swiss. Oops, dollar Swiss, let's just resize it there so we can see what's going on really. Got knocked down just below the upper part of cloud, didn't get all the way up to the 786 retracement there. Can still do it, but I'm not too confident. But if it does take it out, well, then I think we'll see a strong move above 81 towards 81.50. However, if it starts sliding back here, keep an eye on that, then it could resume downtrend. Key support here at 78.90 level. That's a key support, but I think we will see it sliding low. A little bit indecisive. We have the 200 moving average pushing it lower, the 55 slightly up, and the 100 down. So there's a little bit of battle going on here at the moment in this region. So we could be trading in this region here for a little while before it makes up its mind. Will it move higher or will it slide back? I think it will do the latter, slide back, but I need confirmation. Dollar index, more or less the same picture really. It spiked up to the 61.8 retracement there, and then slided back to below the 55 moving average. So you can see the 200 also coming down there, 100 giving a little bit support. I think it will slide lower. You can see the RSI rejected the 60 threshold. So unless it takes out and stays above this level here on the at the 99.25, then I think we will see also the dollar index sliding back, meaning we will also most likely see euro dollar pushing higher. But it could take a little while, and where it's sideways range trading here. So be cautious and be patient for direction. On metals and precious metals, start with the gold as usual. Push higher yesterday, a little bit setback today. Behind a bullish trend, there is a bit divergence, as you can see. RSI values down there, but peak was here. But still, the bullish trend is still there, and I think we could see it pushing towards 4,700, possibly higher here in the coming days and weeks. And on the weekly, let's move to the weekly. There we are. More or less the same picture. You see RSI values indicating uptrend exhaustion, but for now still it is in a bullish trend, so trust the trend so far. But be careful, there's a lot of nervousness in the market, and it could suddenly set back again. Massive move in silver yesterday, also more or less the same picture as gold. I still believe we could see it touching 90, possibly higher, very strong indeed. Also given the fact that we have the RSI pointing higher, there is a little bit of divergence building up here, but for now the trend is intact, and I think we will see it pushing higher here in the coming weeks. But again, also here, expect a lot of volatility, so be careful. Platinum lacking a little bit. So let's see if it can push higher. There's no divergence here, maybe a little bit here on these peaks there, but again, I think it will take out 2,500 eventually, especially if gold or silver continues higher. I think that will be the driver here, but a little bit stretched and a little bit lagging here, so be careful. Also there, copper. In a little bit of correction phase, trading around the 786 retracement there at 602. I think if it takes out the peak there at 611.25, then we are looking at 630, 640 possible. We are a little bit stressed, as you can see. RSI values declining here, a little bit lower than over here, but again, I think we'll see copper pushing higher here in Q1. Moving on to the crude oil market, energy market, where we had a bounce, especially after what's going on in Iran, and now some tariffs on countries trading with Iran, and that of course will hit China again, the China import again. So pushing crude oil a little bit higher. Crude oil RSI daily here, WTI crude oil daily here, testing the 60 threshold. So yes, it established a little bit of a bullish trend, but it hasn't confirmed it by an RSI above 60 threshold. Key resistance here at 60.5, and the 100 moving average coming down here. So can it push above 60.5 and above the cloud? That would be major break for WTI crude oil. Brent crude oil, on the other hand, has to some extent done it. If it will come out here, there we are. It is still in the cloud. It is still around the 100 moving average, but it's above the minus resistance here, 64.09. And RSI actually did close above 60 threshold yesterday, so it has a confirmed bullish trend. So maybe is that the front runner here for also WTI? That would be key towards the next few days, and then it could push higher towards 66 area. Where we have the 200 moving average coming down there. European NatGas, massive move the past few days. We were warned yesterday when it started pushing higher and above the falling trend line, above the resistance there, and the 61.8 retracement at 30.27. And very close to a next resistance. That's a strong one, given the fact that we have the 200 moving average coming down here at around 32.57. So I think maybe we could see a little bit of a setback, but positive sentiment on the RSI could push European NatGas higher towards 33, 34, maybe even higher here. And we are in Northern Europe. It is fairly cold at the moment, a little bit colder than it has been for the past few years. But looking historically, it's not that bad actually. US NatGas, well, still 3.13 support there. That's the gap support. If it takes that out, then we're looking at the levels below $3, but bouncing maybe a little bit, maybe up to the 370 here at the 382. 382 retracement could be seen, but negative sentiment, so I think it will be short-lived. US 10-year Treasury yield, same picture it's been talking about for so long now. It is the 420, 421 key resistance here that should be observed. If it takes it out, then we are in a potential move towards 435, 440 with the given that we have this shoulder head shoulder inverted like pattern here going on. On the European yields, we had the EU 10-year hovering around the 280 level. And I think we should adjust this a little bit down to here. So there is actually potential down to 275. But this around the 280, and it seems to be a fairly strong support for the EU 10-year. I think it will bounce a little bit. Once again, we have the 55 moving average coming up here, giving some support. The UK 10-year, on the other hand, testing at the lows and support here at 437. If it takes it out, well, then we could be looking at 427, 428, which is a 138.2 projection of this correction here. But it broke out of this triangle-like pattern, so that is the potential downside. We also negative sentiment indicating we could see that. So against the other markets, really. On the other hand, we have the Japanese 10-year pushing higher this morning. I must admit yesterday, yes, I expected it would be trading sideways a little bit, but it didn't. Now it pushed higher, and I think we could see it pushing towards 220, very close to 225 possibly here in the coming weeks. Finally, on crypto and Bitcoin, well, I think it slowly starts turning around, and I think we could, in a few days' time, maybe see 94,640 being tested. If it's taking out, we are looking at 100,000, more or less the same picture on Ethereum. It's still above the 55 moving average. That's still slowly turning around. Positive sentiment indicating likely higher levels. All right, that's all for today. A little bit long one, sorry about that, but have a nice day and keep charting out there.